When will the government release the next tranche of sovereign gold bonds? The first quarter is over, and there has been no announcement regarding this year's release of sovereign gold bonds. It is a delay as typically the RBI releases the first tranche between April-June. Interestingly, if we look at the frequency of the release of these tranches, it has been reduced though the quantity of gold subscribed has increased. For example, in FY24, just 4 series were released compared to 14 series launched in financial year 2018. But if we compare the units of gold subscribed, it has gone up, underlying the growing popularity of the scheme and hence increase in liability of the exchequer. In FY24, 4 series were released, collecting total 443 lakh grams of gold, far surpassing the 123 lakh grams in financial year 2023, 270 lakh grams in financial year 2022, and 324 lakh grams in financial year 2021, when total 12 tranches were released. Why the frequency of SGBs slowed down? The introduction of SGBs in 2015 was a strategic move by the government to address the growing current account deficit, primarily driven by the high demand for gold imports. SGB became a hit as it offered a digital alternative to physical gold with a fixed interest rate of 2.5%. This initiative was, however, built on the expectation that gold prices would remain stable. This stability of gold during 2012 to 2015 allowed the government to capitalize on the opportunity by offering SGBs at a 2.5 interest rate, which was significantly lower than the 7% interest rate typically associated with government bonds. But here the catch is, unlike exchange-traded funds which keep an equal quantity of physical gold in vaults, there is no physical backing of gold in case of SGBs. The strategy was financially sound as long as gold prices remained within a modest range. Interestingly, there is total 139 ton of outstanding gold subscribed under SGB scheme, which is 17% of 822 tons of gold held by RBI. The growing number can be an alarm as SGB doesn't have any underlying physical gold. Gold prices have risen because the COVID-19 pandemic in 2020 and subsequent geopolitical tensions have led to significant changes in the global economy, including a sharp increase in gold prices. As a safe haven asset, gold saw its price surge during these uncertain times. In 2023, gold prices surged by 15%. In 2024, gold has given a return of 13% till date. Hence, this steep rise in gold prices has dramatically increased the government's liability on SGBs issued at much lower prices. Back-of-the-envelope calculation shows that the exchequer paid around Rs 1,800 crore extra compared same money had been raised through government bonds at 7%. With total 67 tranches issued so far and only 4 redeemed, this liability can increase multifold if the gold prices continue to rise at the same pace, given expected cut in the U.S. interest rate and ongoing geopolitical risks. Hence, the government has slowed down and might take a pause in issuing new tranche of SGB. So what are the other options to invest in digital gold? Well, one of the best methods is exchange-traded funds, or ETFs. They are listed on the stock exchange with gold as an underlying asset. The prices of ETF are also close to the actual price of gold. You only need a demat account to buy an ETF, and they have the expense ratio of 1% for managing the fund. Second, there are gold funds. Here, if you don't have a demat account, you can get it opened with a mutual fund company. The cost comes to around 2%. Third, there is gold saving plans offered by fintechs. They offer gold for as little as Rs1 according to your affordability. Here you need to know that there is premium attached to gold prices, hence bit costlier. Moreover, it is not regulated by SGB, unlike ETF and gold fund. Hence, do invest in digital gold in a way that suits you the most.